this morning. Switch on the board and get to the commodity market. Brent from WCI. What a mess it is in the Middle East. How do we thought we went this morning around 90? We breached that level just briefly in the last, let's call it 90.
long right now and the market pushes down and it gets below this, support area, it gets new selling, it's going lower today. So instead, if we want to get long today, intraday as a trader, we want to first see the market get above Friday's high, and then second, see new buying, see support up there. Then we get long, right? So we start with that higher time frame understanding to give us a context to know how to take trades. But to be very clear this morning, the only trades, as far as I see it, is that chop zone. We either get above and we get support, and then we can get long. We get above and fail, and then we can get short. Well, not really here because the opening price is right on it, but normally we would get short to target the opening price. Or same thing at the low. We get below, we get new selling. We're short to target the lows from the overnight and from Friday. And if we look below and fail, we can go long to come back up to the opening price. Okay, those are the trades. Looks like we're going to get one right now in the first minute of the day, testing Friday's high. Could have been an hour into the day for all we know pre-market. That's why we just got to wait for the market to open and then see what happens, see what it gives us. Okay, so here we are. We're testing Friday's high. This is bullish to see. The question is, can they hold it? Can they stay above Friday's high? You see how right at the opening bell, all that liquidity that was down there that we were talking about earlier instantly disappeared? That's the bots. Shenanigans have begun. Looking up right now, they're taking out. You can see all these stops getting taken out up here. They're taking out the sellers from the overnight, and they bring in new buyers, and they get support up here. Okay, so because the gap is so close, they're probably going to poke up right now and get a gap fill. That's not really a confirmation of bullishness. We really need to see them come back down into yesterday's high and turn it into support around 75.39. Is that support holding? That will truly be the sign to be bullish. The move up to fill the gap now is just going to be short covering. We know that they're going to poke up because we keep bringing in these big green dots at the highs. Each time we make a new high, we have a big green dot on Bookmap. That's telling us they're taking out stops with each poke. As long as it works, they're going to keep doing it. So if they were able to stop out traders at Friday's high, they'll be able to stop out traders at the overnight high, which will mean we'll fill that gap. Okay, so we just got some actual real support. We know that because the green dot we just got was at the low, not at the high. That's buyers stepping in and buying support. So again, increasing the odds. We're about to poke up and fill this gap. Once we re-enter yesterday's range, or sorry, Thursday's range, we look for resistance. If they get smacked down as soon as they get in there and come back through the opening price, then that was probably the high of the day. But if we can get back inside Thursday's range and stay there, we're then bullish to head up towards 75, 79. XNO says, you said you don't want the 5-point moves, but the gap fill move you pointed to is only a few points. What am I missing? So the gap fill is the first of a much bigger move. So you got to understand, the filling the gap, that's a quick little scalp. You're right. But the point is, if you got long at yesterday's high, you could stay in that long until we get all the way up to 75.99 as a day trade. You don't have to take profits at the gap fill. Or you could take profits on the gap fill. You could watch what happens when the market gets inside yesterday's range, or sorry, Thursday's range. And then if it gets new buying, then you get in that larger trade. Okay. All the chop zone high is an opportunity to get in a trade. It is not a requirement. All the gap fill is an opportunity to take profits on a trade, not a requirement. Each trader needs to trade it how they would based on their own experience. Okay, so that gap is filled, and we are now entering into Thursday's range. This is going to be a key area because there's only really one of two things that happens here. Either the volume tapers off, the price turns around and comes back down through the opening price, in which case we probably made the high of the day, and we're going to start to head lower from there. That would be very bearish to see. Or we're going to start to stay up here. We're going to start to spend time and we're going to bring in volume inside yesterday's range. If we spend time and bring in volume inside yesterday's range, then we'll be looking for the next move to the upside, which is a much bigger potential move than the gap fill was. But we need confirmation. We knew we were going to get the gap fill because of the support we saw right here, and because we knew that they're just picking up to take out stops, which, by the way, they're still doing at this very moment, taking out stops. But if we get new buying up here, that leads to the next wave. So we got to take it one step at a time. As of now, this is bullish to see, and we're looking for that new buying.
I'll come back to value. I'm trying to get back down to value area.
On another one of these.
Feel like we're far extended,
Nice.
50%
Large
level.
green dot at the low. All that support. That's our confirmation of new buy.
Let's see.
Because right now, where are all those last three big dots? They're all at the highs. New high, new high, new high. That's just shorts covering. Now we need those new buyers to step in. So I would describe myself as bullish as a day trader, expecting a bigger move to the upside as long as we stay above the opening price, 75.35. But if we cross through that opening price, that tells us the move to the upside just, shorts covering.
Now we need to see. We're gonna see here. Are we gonna use this value as support, as acceptance for buyers or accepting,
There's a question here. The
or
concept of getting to
back-
Friday's high,
back
you can retest, failure
to
to
possible
success.
PLC.
To do in candlestick charts. Yes, it is. You can use any chart you want. That's why it works so well. Because everyone on earth is looking at yesterday's high, at Friday's high. No matter whether they're using 1-minute candles or 30-minute candles or 4-hour candles or daily candles, every single candle reverses right there at Friday's high. So that's where they're going to decide, do I want to be long or short? Right? They're going to make a decision there. If they got short on Friday, again, no matter what they use as a trader, if they got short on Friday, they probably had stops above that high. If they got short overnight, they probably had stops above that high or above the overnight high. So that's why we poked up and we keep taking out stops, because everyone sees those levels, regardless of what they trade. Now, for me, you're saying, okay, well, Charles, if you could see that on a candlestick chart, why do you need TPO? Why do you need boot map? Well, because the edge is very limited on a candlestick chart. All you can see is where that high is. But on a TPO chart, we can see how that tapers off, where exactly the volume reverses. That's why my chop zone low is here and not all the way down here, because I can see where the market found support. So I know if we get below there and get new selling, we're going lower. I don't have to wait for it to get all the way below the daily low to get short.
So we are respecting value.
That's the added edge that the volume profile and the TPOs give us. The book map lets us see these volume dots. It lets us see that we've got icebergs on both sides of the market. So we know this
Might be if I get another setup here once the IB is falling.
Sellers. They're not
10:30.
really convincing people to go long. They're not really making the market bullish. They're just taking out stops. And we know because of the icebergs of about equal size on both sides of the market, we know that it's just high frequency bots that are doing this. They're pushing it up, they're pulling it down, they're pushing it up, they're pulling it down, they're taking profits, they're getting in, they're getting out, they're getting in, they're getting out. They're just using the fact that there's a ton of people that are going to get stopped out at at Friday's high, and a ton of people that are going to take profits at the gap fill. They're using knowing that, right, with their very fast thinking, beep, boop, beep, boop, beep, boop, to get in and out of trades. Look, they're doing it again. 75 contracts long, 75 contracts short, almost the exact same level. So this is high frequency bots. So if all you have is candlestick charts, you're missing a lot of data. You're not understanding where it has business happened in the past and what business is happening right now in this moment. That's the edge. That's why we use these two pieces together. Because when you combined what the market has done in the past, which is what the TPOs and the volume profile show you, with what the market is literally doing in this moment, which is what the order flow shows you, you know more information than the people that are trading with candlesticks know, which gives you more of an advantage. Now you have to know how to read it, and you have to accept that in all of these things there is randomness, right? There's no guarantee that the market is going to do something purely because of something you see on a chart. But when you combine these things together, you get better and better as a trader. We talked about the football analogy. You know, when a quarterback is first learning how to be a quarterback, really all they have to learn is how to throw a football, right? How to get it to the receiver, you know, how to aim it in front of where the receiver is so that as the receiver is running forward, the ball lands in their hands, as opposed to throwing it where the receiver currently is. And then by the time the ball gets there, the receiver's already 5 feet ahead because he's moving, right? That's the first thing the quarterback has to learn. The next thing the quarterback has to learn is how to read what's happening in front of him in real time. Sure, one play, a linebacker might try to tackle him, and the next play, the linebacker might stay back and try to tackle the person that's going to catch the ball, right? It's going to be different every play. It's going to be totally random. The skill of the quarterback is to read it, to say hike, to get the ball in his hands, to look out at the field and be able to read where everyone is and be able to make a decision about that. So now when he can combine his skill at throwing the ball and knowing how to get it to where it needs to be for the receiver to catch it, and his ability to read what's happening in the actual moment, right? Once he gets those two things in combination, he's going to start to land a bunch of throws and his team is going to start to move forward. But then there's even more skill that he can stack on top of that. He can learn to recognize the difference between the play where the linebacker is going to stay back or the linebacker is going to try to come through the line and tackle him. And if it's a moment where the linebacker is trying to come through the line, he might choose to say, I'm not going to try to throw it today where I have to, or throw it in this play where I have to wait for my receiver to be ready. I'm just going to hold on to the ball and run it, right? Or I'm going to throw it onto the sideline so that I don't lose, any yards because this linebacker is about to tackle me, right? So that's the way it works as a trader. We take data and we get better one skill at a time with it. So you start with the market profile and get very good at reading that and recognizing where the auction changes. Where do sellers become buyers and buyers become sellers, right? Where does previous support become resistance? You get better and better at recognizing those behaviors. Then you add the skill of being able to read order flow and recognize what's happening in real time in that moment and what it means to come next. Then you start working on the skill of entering trades and figuring out, am I a scalper? Am I a day trader? Am I a swing trader? Should I be trading momentum? Should I be trading reversion to the mean? Should I be trading both? Right? You just stack these skills one at a time, one on top of another, on top of another. And before you know it, you have an edge. You have an ability to win more money when you're right than you lose when you're wrong. Speaking of which, what are we seeing right now? At this very moment, resistance. As soon as we entered Thursday's range, the volume is tapering off, less and less volume. So the buyers are not taking control of the market, the sellers are. So that's a little bit less bullish to see. It tells us as a buyer, we want to be cautious here, right? If we're long, and let's say we had our entry around the previous day's high, we probably want to go ahead and get our stop and tick above our entry. We want to protect ourselves because we're not getting that new buying inside yesterday's range that we were hoping for. But what is Bookmap telling us? We still have an iceberg at the high. So even though we're getting a dip right now, we're probably going to come back up for this high again. There's a very good probability we'll come back up for the high because the market knows there's still liquidity there that hasn't had a chance to fill. So the market will go down to squeeze all the buyers, to take out some stops, but then it'll probably come back up again. So can you trade that? Maybe. Maybe you can go short right away, targeting the move back to test the previous day's high, or maybe you can go long at the previous day's high to target the move back up to, finish off that iceberg that needs to be finished off. Or maybe you can just choose to step aside and say, listen, these are quick trades. These are scalp trades. This isn't my thing. I'm going to step back and wait. That's an individual person thing. That's are you a linebacker or are you a lineman or are you a receiver or are you a tight end? That's that type of question. Reading the market, though, it's all the same for everybody. Reading the data and knowing what it means is all the same. And what the data is telling us is we're going to push back into yesterday's range, and then we're probably going to push back up to the high. We're going to go down, and then we're going to go up. And so you trade with that however you trade. But that's the data. That's how you read it. What you do with it is up to you. There's a question here. He says, rookie question. What is meant by filling the gap? So it's actually a good question because I measure gaps differently than a lot of other people measure gaps. So some people measure gaps as the difference between the current day's opening price and the previous day's closing price. I don't look at it that way. I look at it as the difference between the ranges of the day. So on Friday, we opened down here. The gap was from the opening price all the way up to Thursday's low. That was the gap.
Chicken and eggs.
Okay. And we did not fill that gap completely on Friday. We were way up almost to fill the gap, but then we ran out of steam back down. So what that meant was when the market opened this morning, there was a little tiny gap there. And if you look at the market profile software, you can actually see there's a little red arrow. See that little red arrow? That represents the gap. Okay. So when we open this morning, what we know is if the market gets above the previous day's high, there is a higher probability it will fill the gap. It'll get to the Thursday's low. Why? It's just a thing. It's everyone on earth knows about it. Everyone on earth trades it. So there are a lot of people, once you get above the previous day's high, that go long, and most of them will take profits at the Thursday's low, which is what happened here today. See how the volume tapered off right there? Look at how exact that is, where the volume tapered off. It's big and it's fat here. It's big and it's fat here. And then right there, it starts to be less and less. Where does that align with? Exactly. With that previous day's low, with Thursday's low. Why is that? Why do we suddenly stop having buyers when we entered Thursday's range? Because they were gap fill traders. So they took profits there. They got out of their longs at that moment because they were just targeting a move to fill the gap. So knowing that there are a lot of traders that will take that trade tells us one thing: once we enter the gap, we're likely to fill it. And it also tells us once we fill it, we need to watch for new buying or a lack thereof. Because a lot of times you run out of steam as soon as you poke into the previous day's range, and then you reverse. And if you do, as I said earlier, that often is the high of the day. Now, we're not expecting that today because there's something unique happening today, which is this iceberg at the high. So that tells us that we're probably going to find support and come back up for that high unless that iceberg suddenly disappears. Okay. So I know that that's confusing to say. Most of the time we'd be bearish right now because we ran out of steam as soon as we entered yesterday's range. But today is unique because of this iceberg. But that's just the way things are playing out today. Okay. Maximum bot shenanigans today. They got everyone long for the gap fill. They reversed. Now they're stopping them out. They're probably going to cross right through the opening price, take out all the stops, and then they'll turn right back around and come back up for the high. And when they do that, they'll take out all the people that are going short right now, which is what we expected. Rewind the tape, go back to the opening, and listen to what I was saying at 9 a.m. Okay, I said this is how the market's going to behave today. There's going to be a lot of random reversals because we're pinned, and that's just what the market does. When we are pinned, the high frequency bots play a lot of games. They go straight up, and then they come straight down, and then they go straight up, and then they come straight down. They reverse over and over and over again. See, there you go. By coming back down through the open, they just took out, one guy just got taken out for 200 contracts. Well, now that they got him, what are they going to probably do? Turn around and come back up. All right, that's just the game they play. So we were bullish above the opening price. We are now bearish below it. If the market stays below the open and gets new selling, we're looking for a further pullback down into the overnight range. If it crosses back through the open, we're heading for that iceberg. And we just take it one step at a time, knowing before the market opened that this is what's going to happen. It's going to be very, very choppy because when the market is thin, it's very choppy. That's just what we get. Maximum bot shenanigans. So we'll go ahead and mark some support levels here where we will look for a bounce and see if the market can retrace back through the open. So if we just look at Bookmap, we can see this behavior happening. Market pushes up, big green dot at the high. Taking out sellers. Pushes up, another big green dot. Pushes up, another big green dot. Pushes up, another big green dot. Now what's happening on the way down? Pushes down, big red dot at the lows. Again and again, big red dot, big red dot. So the move up was squeezing sellers. The move down is squeezing buyers. That is different than new business. That is different than new buyers or new sellers stepping in. And that won't happen until this bot shenanigans is done, till the chop is over. There's a question here. Why does it have to be that they're taking out stops? It doesn't have to be anything. I'm just telling you what is happening, right? So he says, why couldn't they just be filling contracts they need to fill? We can see that when that's happening. When there's accumulation, right? When they're continuing to buy every dip over and over again, or they're continuing to settle every rip over and over again, we can see that. We know what that looks like on the chart. And that obviously happens, right? Sometimes there's accumulation one way or another. But there's certain market behaviors that we recognize when that is happening. First off, generally the market will be trending on a daily time frame. So you'll have multiple days of the market moving in a certain direction. So let me just take you back to the daily chart. So when the market is moving in a certain direction, let's say right here,
Designed exclusively.
if you're seeing a bunch of big green dots at the lows when the market is coming down, that's accumulation and it's going to keep going. But when you're in a rotational range on a multi-day time frame, it tends to be a lot more shenanigans, a lot more just go up and take out the stops, come down, take out the stops, go up, take out the stops, come down, take out the stops. Just when the market
They have taken out the stops.
differently. These high frequency bots are very, very smart. They have machine learning.
Getting back to
So they
POC.
by minute throughout the day, what is the context of what's happening? And then they trade
Yeah.
according to that. So when
Let's see if
momentum,
the value areas can hold here.
they trade momentum. They accumulate positions,
Only way we can go back up.
and then they get out of those positions. But
would
when
be
the market is in a sideways range bound area, they play both sides very quickly, in and out, in and out, in and out. So
it's these levels here.
it's not me telling you why the market does what it does. I can never explain.
There's acceptance or rejection
All I can tell you
of
is
the value.
it's showing us in real time what is happening. It's showing us that as it's going up, it's taking out stops. Yeah, another way to think about this is, let's say a large player wanted to get long this morning. That's what they wanted to do. Why would they do it at the highs? Why would they wait for the market to go up and then get long at a worse location? And then wait for the market to go up and get long at a worse location? And then wait for the market to get long and go up and get long at a worse location? Why would they keep getting long at worse and worse and worse locations? Smart money doesn't play like that. That's how retail plays. That's how traders with no experience do it. Traders with experience buy dips. They're going long right now, right? They're going long on the way down, where they're getting a better entry and a better entry and a better entry, not on the way up. So if you see a bunch of liquidity, this is showing us the delta between buyers and sellers. This is the actual number of contracts that traded at each one of these levels. And if more of those contracts are long at the highs, that's people getting stopped out. That's not smart money accumulating a position in a terrible way, chasing price. It's the same thing at the lows. What we're seeing right now, this is not somebody with size being like, oh my God, I want to get short here, and then I want to get even more short here, and I want to get even more short here, and I want to get even more short here. No, it's buyers that went long up here that have their stops down here. And it's coming down and it's stopping them out, and it's stopping them out, and it's stopping them out. Those are just different behaviors. Okay, so it's not that the market has to do one thing or the other. It's what is the market doing at this moment? And right now, it's going up to take out sellers, and it's coming down to take out buyers. Now, another way that we can recognize accumulation versus, just churn is, where are these icebergs? When we see these large icebergs, we can see where larger players are doing business. So if they tend to be on one side, if you keep seeing, a green iceberg, a green iceberg, a green iceberg, but there's no red icebergs, then they're accumulating. Whereas if you see the similar size icebergs on both sides, which is what we have this morning, right? If you start to see that, then that's just two-sided trade. They're getting in, they're getting out. They're getting in, they're getting out. They're getting in, they're getting out. Over and over and over again. This 590 is getting out of this 504, and so on and so forth. As long as that's happening, that's shenanigans. That's chop. That's grind. But if we were to start to see a lot of big red icebergs and not so many big green ones, we would know they're accumulating a short position and they're looking to take the market lower. So What I'm saying to you, I'm just telling you what the market is telling us right now. That's all I'm doing. I'm just reading the market behavior in this moment and telling you what it is. And I can also add to it from experience what that means is likely to come next, because I've seen this before. I've seen a market when it's in the middle of a balance area, right, where it's range bound. We talked about how today looked very similar to this day right here, right? It's like I've seen this behavior before. I know what it looks like when a market is in the middle of a range and we've got a chop zone and we fill a gap and then we immediately fail and get back inside the range. I know what all of this looks like. And right now, my read of what the market is going to do is it's going to poke down. I have no idea how far down. And then it's going to turn around and it's going to come back up to the high of the day. Now, just if you don't believe me, just write that down on a piece of paper. Charles said at 10:01 a.m. that the market is going to poke down. It's going to find support somewhere above 70, 74.95. Then it's going to turn around like a V shape. It's going to turn around. It's going to come right back up towards the high of the day. Write that down on a piece of paper and then go read that piece of paper at the end of the session and see what ended up happening. Because one of two things is going to happen. Either they're going to delete these icebergs, which they can at any moment. This is just an order sitting in the order book, so they can choose to remove it at any moment. Either they're going to remove these icebergs, okay, in which case the market will likely break much lower today, or we're going to V-shape back up to them. Because right now we're back in the chop zone. We are just taking out buyers. That's all we're doing. Where are the big red dots? Are they at the highs? Are we selling rips? No, we're selling lows. So we are just taking out buyers right now, not bringing in new sellers. And when you combine that, the fact that we're not bringing in new sellers and we have these icebergs above, it tells us this market is going to turn around and come back up. I can't tell you exactly when. I don't have a crystal ball, but I can read what the market is saying right now, and I can know what the probabilities are based on this data. And what the probabilities are telling me are likely to happen next. And the probabilities are telling me this market is going sideways, probably until after 11:30. It's just going to chop and grind and chop and grind. It's going to make it look like it's about to crash and burn to the downside, and it's going to turn around and come all the way back up. And it's going to make it look like it's about to take off to the upside, and it's going to turn around and come all the way back down. It's going to keep doing this because so far today, it's been working. Pushing up is taking out sellers. Pushing down is taking out buyers. And as long as it keeps working, they're going to keep doing it. That's just how markets work. As long as these high frequency bots are getting paid for playing this game, they're going to keep playing it. And so you must decide as a trader, do you want to participate in that game or do you want to wait until things cool up, until later on in the day where this stops working, where they've squeezed so many people to the long side and so many people to the short side that all the weak hand traders just stop trading. They give up. They go, fuck this. I've been stopped out 3 times already today. I'm done. And then once all those weak hands leave the market, well, then the high frequency bots can't play the game anymore. So then things calm down. And then later on in the session, it gets much easier to read the market behavior because it's much more natural. I'm not trying to tell you how to trade. All I can tell you is what the market generated information is telling me right now and what my skill, what my experience is telling me will come next based on what I'm seeing right now. Any final questions before I say goodbye? There's a question here in the chat. Is there TPO on Bookmap? Yes, there is. You can get it all in Bookmap if you want. And if you haven't tried Bookmap, you really should give it a try. The thing about looking at the current order book, the thing about reading order flow is that it is constantly changing. And by constantly, I mean literally second by second throughout the day. Just look over here at how orders appear and disappear over and over and over again. in a fraction of a second. They're in, they're gone, they're in, they're gone, they're in, they're gone, they're there, they're gone, they're back, so on and so forth. That's order flow. It happens so fast, but it is an edge in trading. It just takes some time. You gotta just let your brain watch this chart move day in and day out over and over again to build that neural network in your brain to be able to read it. But it's like reading, a book when you're a kid. When you first start, you're just learning to, read individual letters. A, B, B, C, S. You're just learning one letter at a time. Then you're starting to put words together. You can read a whole word. Apple, forward. You read one word at a time. But then you get to a point where you can start to read a whole sentence. The apple fell from the tree. And then all of a sudden you can start to put whole paragraphs together. And then you can start to remember that as you're reading whole pages. And before you know it, you're reading, Kafka. Okay. So just take it one baby step at a time.
Here.
To read words as a kid. Just start by sounding out individual syllables. Build it into words. Build it into a bigger context and a bigger context and a bigger context.
Rejection of the value. Rejected off POC.
See this right here. You'll instantly say they're going up to take out sellers. They're coming down to pick out buyers. This is two-sided trade. And just like that, you'll have an edge. You'll trade it however you trade two-sided trade. Whether you scalp or you day trade or you reversion to the mean trade or you momentum trade, whatever your thing is, you'll know what to do with that moment. You'll be able to read and know what it's telling you. With that, I will say goodbye. Thank you guys so very much for joining me here today. If you enjoyed this live stream, you got two options. One, you can join the brigade. There's a link at the top of the screen, piratestraders.io/join. I charge $20 a month, and I do these live streams every single morning for the first hour.
There
you can watch me give my analysis of what's
That's
happening in the market, where the opportunities are, what comes next every single morning. I also send out an email every day. I take on, what the market is going to do, where are the key levels to take profits on trades, so on and so forth. That's, every morning to your email for $20 a month.
Did not get the premium on the short for, I
Charles,
was just coming back on the value on the first short here.
SPX. Money? Well, then just show up here again next Monday.
Which was,
and I'll be here for free to share what I get. As I've said, as far as today is concerned, this to me is reading as two-sided. Right now, the market is on its way down. It has not found support yet, but it will. And I believe once it does, it's going to turn around and come right back up through that opening price.
Shorted this
So
again.
if you are getting
The short on here
you want
because
to walk
SPX.
Don't fall in love with shorts. It might go down another 10 points. It might go down 20 points. But it's probably not going to go down another 30 or 40. So
here, SPX.
Supporting this market. Once the market finds support and starts
Used POC as a pivot. Retracement.
Profits at the opening price.
And
now that iceberg is still at the high of the day. So there's still a good chance we're coming all the way back up to the high of the day. But if it disappears, it doesn't matter anymore. It's only a magnet as long as it's there. As soon as it's gone, which it could disappear at any moment, then it's no longer a magnet. So if that's the way you're thinking about things,
previous POC,
it's on along at the opening price.
POC from
waiting to get back to the high of the day. With that, I wish you all the very best. If you are a member of the brigade, let's.
There's London, London here. This is another support level, which we're going to target it. Target that.
Esperando a ver si esto me da un poquito más de ganancia ahí en esa bajada. Si se devuelve por completo, mejor levanto la.
It's anything except for setups in the server. Aggressive call filling and put selling. So now they're selling both sides. They're selling off the puts they bought, but they're selling off calls too. So maybe hit a little consolidation here. Beautiful stuff, dude. Beautiful stuff.
Yeah, that would have been a nice target. Here, back to POC here.
Wait for the next one. I took a long at the retest of the high volume 1 minute candle. Beautiful. Nice meaningless collection. That is definitely not meaningless. 29,000.75. I love it. So let's go take a look at the ES. I was in minis walking. Minis. ES is still getting clapped all the way down. They do not have a high volume spike. See, the volume is diminished.
Like SPS is trying to get down to value low.
So you can't look for a counter unless you've got high volume. I mean, ES is coming down.
Then Q is continuing back down now.
And your eye instantly need to go down to the.
Oh man, how'd I held that in Q?
Beautiful. What is considered an A plus setup? Well, that's a different question.
Easily targeting the value level.
For me, an A plus setup is conditional based on market conditions. The system, of course, which is number one. Do I have a mechanism on which I identify setups? To me, yes, I have a 3C system. So it's got to be correlated with my 3Cs. It has to be certain market conditions, and tools are telling me exactly what I need to see to kind of help. So everything is kind of cooking. I've made that lasagna, and every ingredient of that lasagna is top-notch, high-quality organic materials, ingredients. So for me, volume, top, bottom wick, higher high, market conditions are ready for a pullback. They're showing pullback. In my opinion, the watch list itself is an indicator. If you have, you have the ability to create a fantastic tool here. This is free. Nobody talks about it. The watch list is an indicator in and of itself for market conditions. I've got my watch list tested and built to where it tells me exactly what the market is doing on a market-wide event at a moment's glance. So everything to me is showing, hey, time to short. That's why I took that short position at highs and all the way down. There are times I don't take A plus setups, and if I do that, by my system law, position time has to come way back. So if I'm normally trading 2 to 3 minis, if I see a setup that I want to take that's not necessarily A plus, or if it's more speculation, the position sizing has to come way down, like 1 or 2 micros, 3 micros, something like that, where the risk reward is defined to be a little bit more risky. So I've got to pull the position sizing back. Anytime risk goes up, position sizing comes down. In all things in life. NASDAQ coming down 28,940. Booyah. What's next? Let's go take a look at the names that have primarily been driving the weakness on the NASDAQ. SanDisk getting wrecked. MU getting wrecked, although after the open green. Google, which reports earnings this week, mind you, is flying. Amazon flat after back and forth. Apple's getting wrecked. Tesla's getting wrecked, also reporting earnings this week, mind you. Microsoft is here. Meta is here. ABGO is flat after a pump and dump. NVIDIA is coming down, and SpaceX is getting back once again to 20. Now, what are we looking for in terms of keywords this week with Tesla earnings? Who owns Tesla, and what other company does he own other than Tesla? SpaceX. So, can we expect commentary about SpaceX in the Tesla earnings report? Maybe they need to sell some shares or increase some liquidity or equity to put into SpaceX or vice versa. So it'll be interesting to watch. Hello, K2XTV. How you doing? New to futures. I've been trading Forex for 3 years. Beautiful. Well, welcome to futures. Let me know if I can help. Do I have any videos on the 3Cs? Yes, I do. I have many, many videos. I encourage you to go check out the YouTube channel. I have many, many videos on all free, of course. I have 4 different videos about the 3Cs. The first one is a summary video explaining what they are. The next 3 videos are dedicated 1 video per criteria. So the first one, the second one, and the third one. What volume profile do you use for day trades? I use, if you go to my indicators, LuxAlgo's volume profile. Now I use KV4 coins and LuxAlgo back and forth. I think they're both fantastic indicators. I like this one because it's color coded the way I like it, and it's on the right side of the charts. I prefer my volume profile on the right side of the chart, whereas the other one is only on the left. That's why it's not on there. I tend to miss the signal when I look at it when it's on the left side because I've got so much going on in my charts. I want SpaceX to continue on down. I want SpaceX to get 40 because I want to buy as much as I can. I want to sell everything I have. I'll sell the couches in the living room so I can buy more SpaceX if it gets 40. You sell any pussy at H. Lopez? I know you did. Don't lie to me, boy. I know you got. I know you should sell some posting. Yeah, you did. Bueno. All right, let's go to the 5 minute. We have volume coming in here. What chart? What kind of price action do you see here on the 5 minute? What do you see here? Bottom wick, another bottom wick. What style of price action is 3 bottom wicks in a row? 4 bottom wicks are on the 5 minute. That's a cumulative. If you know anything about Anna Colling's 4 cycles or Wyckoff's 7 cycles, Wyckoff, I think, has their 6 or 7 cycles. So the 4 cycles, which the benefit of Anna Colling and Wyckoff are both VPA traders. Wyckoff came way before, obviously. Anna Colling took his many cycles and moved them down into 4 cycles, which I think is a fantastic thing. Accumulation, which breaks into markup, which moves into distribution, which moves into markdown. So when you see many 5 minute high volume bottom wicks, that is accumulation style price action. Now, that doesn't give you a signal to long yet because they can smoke this thing back down. That's where the right side of the V comes in, where you need a higher high position. So right about here is what I'm looking for to look for a long position. If we don't close 29,004, no long entry. That's where you start catching bottom, or that's where you start catching the falling knives. NASDAQ still coming down. Options are still very bearish. Still very, very bearish. Let's go take a look quickly at spot gamma. Green line's going down, that is call selling. Blue line going down, that is put buying. When you have put buying and call selling together, that, my friends, is bearish. Booyah. Why not the GIF itself? $28,950 coming down. So, what am I doing next? That's the question. Now, to compound on the 3 C's too, there are times where I have to wait for all 3 criteria to trigger for me to take an entry, and there are times I'm taking only trades off of only 1 criteria or the second criteria. And of course, that's all based on conditions. I need conditions to tell me when I'm going to do it. That first trade we took, banger of a trade, but conditions were ripe. You as a trader need to have a system that identifies when conditions are right and when conditions are not right. Very common problem with the retail trade is to sit here all day long, market open to market close, and try to analyze and get yourself into a trade on every little move. And it's not going to work. Conditions are there to trade high confidence, and there's conditions there for low confidence. Afternoons are low confidence trades. And most of the time, you're going to get yourself in some pretty crappy situations trading in the afternoon. It's no good. So, righty up, baby. $28,960 on NASDAQ. No one calls me Yumma. I'm looking for ES bounce back to 7531 area, but I'm trying to use volume to help me not too early to the trade. That's my typical error, always too early, so I hold too scary stuff. No, that's you're 100% on track there, Mike. Volume is the 100% way to do this. Now, the good thing about that is that you're not alone. That the most common error, even when you're on a correctly analyzed trade, is entering too early. Anna Colling talks about in her book, Complete Guide to Volume Price Analysis, that she went back and looked at if she simply waited a few moments, her entries would be way better and she would have a lot less stress. So entering too early is very common. You could do one thing of just waiting to enter a trade, but that's a little arbitrary. To me, you get that feeling. The more you do this as a trader, you get that spidey sense. You get that feeling in your gut. Oh, holy crap! Conditions are right here. I'm going to take a trade. Now, of course, it's not just that. You have to have all these conditions. When all the conditions start to align, hey, things are going well, and then you confirm and you take an entry. So, a system is absolutely number one. Nasdaq is getting creamed here all the way down. Still, no high volume spike, so no entry. Now, what do I mean by a high volume spike? See all this? There's nothing here. That's a volume spike. This is the reason why I took that short entry here. So the higher the volume, the more likely the pivot. The more likely the pivot. And that's what I'm looking for. The options are incredibly, incredibly bearish. They are diving down deeper into more bearish territory here. Nasdaq is still coming off 28.9. If you're just joining us, we already took one trade today off the highs. 29,171 was our entry. We are out of that trade now, but it's still going. Looking for the follow-on trade here. ES is coming off, no volume. The markets are not enjoying Tesla. Are looking for a value on Tesla with the volume. We have accumulation style volume hitting Tesla. Tesla does report earnings this week. We're probably going to see a lot of volatility with them, along with Goog. Goog is straight green, ripping into Terran. Speaking of technology, you see the news come out about Claude this weekend. And it was a Kiki, the other AI agent. What's up, Ob? How you doing? Welcome. What broker do I use? I just joined back. It's been like 4 years. Welcome back. Welcome back, another person. You still have my green hoodie? You bought a hoodie. Nice. You still have my OM hoodie back when I was selling clothes. I love it. Welcome, man. That's a throwback right there. I'm still using IBKR. I use IBKR to trade personal. Prop firms now. I'm trading prop firms as well. I trade Quantower with Take Profit Trader. So yeah. Options are looking no bueno, man. No bueno. All right. There's that bounce. Like I said, Tesla, which is selling off right now, is putting on accumulation style volume and bottom wick. The S&P is doing the same. Volume is not that crazy here, but we have bottom wicks. So yeah. Can you elaborate on what your large swing position looks like? Yes. Good question. In order to have that discussion, I have to zoom out to the daily chart real quick. Daily chart looks like this, which, by the way, even if you are a scalper or high frequency trader, you need to spend some time every Sunday night or Monday morning during the week by looking at the daily and weekly charts to figure out what the macro theme is and go from macro to all the way down to the micro, big to small. So for me, we have a quadruple rejection off this area, which is the value high area on the volume profile. On the daily chart, we have 1, 2, 3, and this is 4-time rejection off this. So in terms of the right side of the V, If we close under this little range right here, which is bottom wick, bottom wick, bottom wick, another bottom wick from Friday, that'll give us a right side of the V trigger with volume, which tells me it's time to start looking for at least a temporary short dated swing short position, which is for me short dated on swing short, anywhere between 3 to 5, maybe 6 weeks in expiration, and anywhere between 30 to 50 points out of the money. That's if I'm being aggressive. If I want to be less aggressive, I'll go tighter. Now, the reason why I like going a little bit further out in expiration is simply because I can also sell puts on the short term sale. Again, I'm in spread the trade. So if I'm in a long put on a longer expiration, I can go to a shorter expiration and sell puts against that premium and spread the position and lower my cost basis. So it gives me a little bit more freedom there. But either way, if we close under this area, we have a right side of the V. Now, if you don't understand what I'm saying with the right side of the V, if you have a move up, you have a move down, the retail trader, you need to enter here, not here. Your job is not to enter at the tip top high of the trend. Your job is to enter the right side of the V, where after it rejects and starts coming down, that's where you want to enter for the most opportune and less stress. We all want to enter the tip top of the trade, but that's not realistic. Most of the time, that's going to lead to destruction. So we close under this level. I'm going to look to short down and sit there 73.60. And then if I'm lucky, 72.33 pretty quickly and lower. But the whole point is everything is thought out. I'm not saying, well, I'm just going to take a short because we can't keep going up. I wait for market structure to break to teach me or to coach me into a trade. By the way, high volume bottom, like on the 5 minute for the S&P, 3C indicators right here at 7516. NASDAQ is already in a 3C here, technical from 985. About to put on a nice move back up. Options are starting to take a breather. Like I said, Tesla is having some accumulation style price action. If you're looking for a call, consider some short dated Tesla calls right now to 378. I would take probably a 378 strike, a couple of days out on Tesla. Get yourself some cheap contracts because I think Tesla's going to regather up a couple of points. You can get yourself 30, 40%. Send me a Christmas card with the funds. So you leg in out of calendar spreads to reduce risk. 100%. 100%. As needed. I think it's a great way to lower your cost basis. Any way I can, the market's a farm, baby. The market's a farm. I farm here on my own personal land, and I farm in the charts. And I want to plant as many seeds as I can to farm that harvest. And that's what I do. So I take a position that is well thought out for direction and for delta growth, and so I can juice that premium with short options. NASDAQ is 29,002 here, coming back up. We have a 3C bounce indication here on NASDAQ. The volume is not the greatest, but the price action is showing bottom wicks, which means you can take a long entry there, but position sizing has to come down. If you don't have a full-on high volume 3C, position sizing has to come down, which is okay. How do we avoid wash sales on SPY trading similar contracts daily? Is it possible to alternate between SQs? It is possible, yes. Now on options, you're not really going to face a lot of wash sale pressure with options. It's very difficult to quantify the like-minded trades. I've never had a problem with wash sales on options. With commons, you will 100%. You can't do all that stuff. All right. Once I have my my computer part switched out today, I'll be back to streaming Bookmap tomorrow, along with Spot Gamma. So we'll have all of our tools firing up and ready to go tomorrow. You see how they're defending this green line here. The reason why I put that green line there is because of this pivot right there. That is a higher high. So we come up, we reject back off of it, we regather, we close it. That's bullish absorption. And now we'll make a move up to 29,050. Right there. 29,050 will be the next target after we absorb this area. So don't go longing into 29,005 without some absorption. Otherwise you'll get top weight. So they'll drift this thing up another 30 points or so into that. And then from there, we'll have to start thinking about the 50 Fibonacci, which will be pretty much right at the same area, if I had to guess. Yeah, so right there, same there. The 50 Fibonacci is right at the 29050. So a lot going on there. You cannot long into that position at the 29005. You got to be long down here and then drift into it. Not without some absorption, at least. Welcome to the YouTube channel. If you're new to us, hang out with us. Make sure you hit that subscribe button, get notifications for all future live streams. Caught 120 points per contract this morning. And we're rocking and rolling, baby. One losing trade posted in 3 weeks now. One losing trade posted in 3 weeks. When we posting contract trades, A-plus trades, baby. 2903. And that is a 7520. Coming up. Good questions. Good questions. Coming up, 7522, rocking and rolling. The S&P is not at their 50% yet. NASDAQ is more bullish on this move here. So if you traded the Qs or traded NASDAQ, you're getting a little bit more profit here on this move. NASDAQ is coming up. See the top look off 2905? That's why it behooves you to look left. Your eyes always need to be looking left to look for pivots at high volume. So a lot of people FOMO, holy crap, there's a bunch of green, let me take a long position, just got clapped. And that's really because of one or two things. Number one, they don't know how to look left. They don't know what to do. They don't know what to look for. Or number two, they're zoomed in way too far. They're zoomed in like this, and they can't see you look left, which obviously is not good. So I prefer a macro perspective like this. Zoom out, look left. There you go. Would you say this move up on the ES was a 3C? The volume wasn't crazy on that move. Now we did have some stopping volume to change the characteristic of the price action, right? So look, we had the high volume top wick here, which got us into the short position. But then what happened? This volume here was the characteristic. This was like Mike Tyson's right hook to the jaw. And yes, you're still standing on your feet, but you're kind of dazed. You're not the person you were before he jacked you in the face. So the volume comes in to stop it, and then we go from this extreme downtrend to this back and forth, and the bulls begin to accumulate. The bulls begin to put in their orders. And we don't have the follow-on high volume spike, but we do have the initial volume to stop the bleeding. Right there. Puts in a 4, and then we come back up. So it wasn't a typical 3C, but we did show signs of the bulls hitting at the bottom here. Now, I did not take the long position back up, which is fine. I took the short initially. There's nothing worse about giving back profits after putting on a fantastic position. Yeah. Guru, glad to see subscribers grow here finally this week. I've been over trading. I'm trading poorly. Yep, that's a bad combination. Over trading and bad trading is a bad combination. Say I buy and sell similar or same contract each day. Wash sales shouldn't be an issue. So I'm not trading them during December with bank meetings. The options, you're not gonna have problems with that. If you're trading commons, you are gonna have commons is just trading the stock. You are gonna face the wash sale. But when you're trading options, the whole purpose of the wash rule is to keep you from manipulating your P&L for tax purposes on similar or like-minded products. So in options, yes, you're still trading like, let's say, SPY options, but you're trading different expirations, different strikes. They have different Greeks. They're not the same product. You're trading the same underlying, but the options are different, inherently different as you go from expiration to expiration. They act differently. They make money in different ways. So you're not going to get hit with a wash out with that. Now, financial disclosure, don't make decisions based on my dumb head. Do your own research, do your own due diligence, find yourself a qualified CPA or tax professional to give you some proper information. I'm just telling you what happened to me and my experience. Trade at your own risk. This is for entertainment purposes only. I'm here to entertain you. You're welcome, amen. All right, NASDAQ is back and forth here. We're coming into 1035. 1035. Where? Nice, Lowen. Well done, buddy. Well done. I have a question for you. That's pretty common. How many times do you short the low of a move only for the market to mess with you? So the market moved down, you chase, you short a position, and then for it seems like the entire session, the market will use your order, your entry as support. And you'll come down, you'll see your briefly break from red to break even just for a second, and then it bounces. And it never ever goes below your entry ever again. Or the other way around. You long the highs and it uses your entry as resistance. You can admit it. You can admit it. You can admit it. Happens to everybody, right? You know why that happens? It's called reactionary trading. It's because you're not waiting for a system entering like wider firing from the hip. Very, very common in trading. And let me tell you, the DMs that I get, that is a very common issue. It's like the people think the market is paranormally triggering them, going against them. Like there's a ghost or a monster in the charts that they literally look for your input and they pivot you personally and perfectly. That's not the case. That's very common among retail traders. And I say the term retail, arbitrarily, I guess I include myself in that category. But if you don't know what you're doing, or if you don't have an A+ setup like I did this morning, you're just going to kind of trade erroneously. You're going to chase trade. You're going to reactionary trade. You're going to see red in the short. You're going to see green in the long. And you get caught up in the liquidity sweeps. You get caught up in that move that shakes out before the big move, the correct move. You end up shorting the exact low of the market or buying the exact high, and you get caught being that jabroni. Yeah, but Vampire just said, if you don't know where the liquidity is, then you own the liquidity. So, if that's the case, don't think, holy crap, the market's against me. Instead, think like a winner, figure out what the problem is, and fix it. All right, 10:38 here, NASDAQ. Things have gotten a little tight. We had the 10 o'clock move. We had to bounce back up to reclaim half on the NASDAQ. If they do reclaim the 50% fib, which was right here at this rejection, I'm sorry, right here, I was on the 15-minute, right here, then if the bulls will retake back up to the highs. So that's your indication. The bears are in control under 29,005. The bulls are in control. I knew coming from. Appreciate you hanging out with us here on the YouTube. Welcome. Okay, YouTube. Come hang out with us again tomorrow. Beautiful stuff. Told y'all. I'll be posting trades again. Told y'all. I'm starting to notice a trend. NASDAQ low today bounced exactly the overnight 50% fib. Heck, that 50% Fibonacci is power. I have to admit, I've been very critical of any kind of pattern or indicator the past couple of years, strictly because I'm a VPA purist. That 50 Fibonacci has been the only thing I've added back to my charts in the past year. In the past 6 years, I've scrubbed everything off my charts except for VPA-based signals like 3Cs or volume profile. The 50 Fibonacci is the only one that squiggled its way into my system because it's so powerful. The market, there is a component to price action trading that is pattern-based. The algorithm does work in patterns. Mean reversion, that's why. The market extends, pulls back halfway, or 0.68. The market drops, it bounces back up to 0.5 or 0.68. And intertwining that category, intertwining that indicator can help you pick out stuff you might have otherwise missed. Mean reversion, that 50 Fibonacci is fantastic. It's to the point where I use it every day, but I'm going to be making a video on how I can tie in the 50 Fibonacci into my 3C system in an official format. Do I use GEX levels? I do track the GEX, yes, but I don't plot them on my chart anymore. They kept leading me astray more often than they would help me, so they were not reliable enough for me to use. An option chain in general is more. the option chain, like all other tools, for the most part, is completely useless if you do not have a volume-based system. If you are trading and making decisions off of options data alone, you are going to get destroyed. Because dealers like to counter positions. Dealers like to show the offhand, which is the short side of the market instead of long side, or you simply may be misinterpreting the data. Not to mention, there's 1,000 different people out there offering options data as a tool, companies, and they're all showing different data, or different timing, or different feed, or different speed. So it's difficult to go off options data. However, any tool that shows market data like Bookmap or SpotGallop or trading ticks or unusual whales or anything else, your job in that is to identify one-sided behavior. Skew is what I call it. So if the options are heavily skewed towards call buying, put selling, that's bullish. Or the other way around, call selling, put buying like this morning, that is bearish. If the order book on Bookmap is showing an aggressive amount of order flow being pinned lower, that is bearish, and you can chase that back down. So all this kind of stuff is to show you when the market is heavily skewed. Now, I think personally that there's an overuse of these tools. I think the retail trader in general, they're utilizing these tools way too much, and they're trading too much off of these tools. These tools are not meant to show you the crystal ball trade every single day. Your job is to track this stuff every day, where every once in a while, one day a week or one day every other week, it's going to ping an anomaly, and you have to exploit that anomaly. All right, there's 5 billion of puts being purchased on the tape, but it's just not normal. Okay, the market's going to go down. I just have to figure out when the market's going to start turning down. So I use it to keep me on track here. That's what I use it for. And Gex levels led me astray more times than it helped me. Now, the further we get into new all-time highs, where I do not have historical price action to help me, the more I have to utilize that stuff. The more I have to lean on forward-looking data because that's all I've got. Make sense? Yeah, buddy. Good stuff. Good stuff. NASDAQ has gotten tight. The S&P has gotten tight. The further you get into the morning, the less you should trade. I want to show you this tidbit. I've posted this before. This is the old one. I'm in the process of redoing it. Right here. Key market times. Right there. So I highly recommend, in addition to forming a way to analyze trades, that you have a time frame on which you apply the system. So the open, which is shaded in orange, is the first 15 to 30 minutes of the session. That's very volatile. You have to understand the conditions of the market there are what's called manipulation phase. The manipulation phase is the liquidity sweeps, the profit taking, the too much, too fast reactions, the reactions over overnight moves, the profit taking from the prior session. So that is momentum trades or manipulation trades that you want to catch on to the buck and bull, or the old man being given Yellowstone with smaller position sizing. After that, you get into the prime time trading hours. From 10 o'clock Eastern to 11 o'clock Eastern is prime time meat and potato trading times. The best time of the day to trade. After that, you get into diminished conditions, still tradable, but diminished from 11 o'clock to 12 o'clock Eastern. And then you get into the hands-off time frame. The red shaded area here from 12 o'clock to 1500 Eastern time, which is 12 o'clock to 3 p.m. Eastern time. Stay out. You do not need to be trading. Use that time to back test, log trades, eat lunch, do some fitness, anything else. Actually do your job, but no trading in that time frame. And then the power hour, that's arbitrary. That's back and forth. There are times to trade it, there are times not to trade it. The power hour is the setup for the next session. So typically, you get some weird behavior. You get some massive bounces after a red day. You get some massive sells after a green day. So I trade during power hour as conditions permit. If we have one of those crazy bull days where the market just goes straight up all day long and never reacts down, I'll short it in power hour because it's a great trade to put on an SPX 0 DTE trade for 30 cents. If you know, let the premiums go to $6. It's a fantastic way to make a huge gain. So as conditions permit, I'll trade the power hour, but 99% of my trades fall in the green shaded block from 10 o'clock Eastern to 11 o'clock Eastern. I'll even pull that back to 9:45. I trade 9:45 sometimes, but that general block area is meat and potatoes for trading. So have a system which you identify behind. Yeah, coming down again. Nasdaq is coming down. Nasdaq 50% of Fibonacci. Right there. Beautiful stuff. Just signed up for tier 1, but I'm having trouble seeing tier 1 section on Discord. Let me take a look, HPNO. Let me take a look. Bear with me. If you connected to Discord, if you connected your profile to WAP, you should. Yeah, so your roles didn't assign, which means you didn't connect. Here, I'll get you something. I'll get you something. There you go. I just sent you a DM in Discord. All right, another bottom wick here with volume. So that looks like a quick shake and bake. That, you remember the imbalance? This imbalance right here looked a lot like what we just saw here. And what's the whole theme that we're seeing right now? All right, bottom wicks. This is where people become overly bearish and miss the accumulation. They miss the accumulation. Why doesn't the high volume candle on the session Nasdaq high not show the same size volume on Qs? Well, those are different products. Yes, they follow the same underlying, but they are different products. You are right; it doesn't show the same on Nasdaq. So there's the Qs. The high volume spike came in right here, and there's not much volume down there. But if you go to Nasdaq, we do have an extraordinary amount of volume with that. So, I mean, they're different products. Sometimes you're going to see that. You're going to see different volume on that. You know, especially with the Qs, there's going to be more options taken into account there. But, yeah, we're going to 29,230 today. Nice. That'd be nice. All right, coming back over here still. We didn't get a higher high there. The options aren't really showing much. The 5-minute shows this nice accumulation. We had another bottom wick there. Bottom wick here that just got collapsed. No higher high to break out into a high position. So still going down. Let's go take a look at some other names. Gold, which is something I trade on the at least semi-frequently basis. Gold is showing another high volume spike here with a 3C long from 4006.8. And they're coming back into the consolidation here. Not the best conditions for trading gold after that consolidation, but current sentiment, what a nice little peak. Silver's coming up with a low volume bottom wick. High volume over 56.85 on up. It's hard to believe we're talking about silver in the 50s again after what happened this winter. Oil, massive dump and pump, still holding 81.6. Now, with all the peace and ceasefires, you think we would see oil back down into the 60s, but that is not the case. Oil futures are pumping back up into the 90s. Yes, Nasdaq still coming down here. I want to be very selective with my trades. I'm not a fan of shorting lows unless conditions are there. I've done that last week. Last week, remember, I shorted a low and it worked out really well. And you have to do that very selectively. You go shorting at lows, most of the time, you're going to get destroyed. So you have to be very selective on when you actually place that position on the books. Right now, I don't like it. I don't like it. Not yet, at least. The conditions may change, but not yet. Is one chart better to follow volume in day trading? It depends, I would suppose. You know, me as a day trader, I like to follow the NASDAQ futures. NASDAQ futures are the big boy. It's one of the most aggressively traded futures contracts in the world. So 100% we want to be watching the NASDAQ contracts. And it's very easy to see volume spikes on NASDAQ because the notional is so big. Let's see, calls are not really doing much here. Coming back over. Right there. Still rocking and rolling here. If they break the lows with no volume, we are going to start tracking to 28,850. On down. What does it mean when there's a high volume spike with a bottom wick, but it fails? Such as ES 1045. Yeah, so if a high volume bottom wick puts on like that, now it resulted in, you know, a 70-point bounce. If that immediately fails, that tells you that the sellers are actually pretty aggressive. Especially if it doesn't close a higher high in the 5-minute. Now, in the 5-minute, you did not get a long signal. So it just shows you how aggressive the sellers are. And now you have to wait for the test here of 28.9. Now, again, I'm talking in terms of looking for a bounce. I'm looking for a bounce. We got one beautiful, healthy bounce to the tune of about 100 points or 140 points. Now, if you want a secondary bounce, you need a high volume bottom wick and a higher high. Otherwise, you're going to fail 28.9 and continue down into the 28,850 mark here. So you just got to think through stuff here. Think through stuff. Conditions right now are pretty aggressive for their side. They are controlling the book at the moment. So you don't want to go bind.
Another one here, but just
I
got
get 15 minutes after market.
breaking out a break even.
Work. Forcing me to have to trade the move before the move.
We can go back up, but
Great. Well, appreciate you coming to hang out with us and join the Discord. I'll continue to post some A+ in and if you're making some money.
Yeah.
Learn how to do it. One of those things.
Coming down.
Water, but you have to learn to drink.
NASDAQ filled the gap from Thursday's gap of last week.
NASDAQ new
Filled last week's gap, and then took that liquidity, drove it all the way down.
So here is our morning range.
So
Right there. The red line right here is the close of the 10:30 Eastern time, 1 hour, first hour. So the first hour of the market is 9:30, 10:30. This range, this red lines, plot the first hour range, high and low. So you see right now the market came in, put in the low.
Below
closed.
IB mid,
Got the 50% of the revenue.
both NQ on NASDAQ and SPX. So it's a weak. This is a weak market.
Odds are we continue to put in the morning.
NASDAQ probably coming back down to last week's POC here. That's the target.
So they got closed.
Just shorted this.
At this point, we're going to be gunning for 28,000. And then after that, 28,766. Right now, the bears are absolutely controlling the tape. The options are once again flipping back toward bears. They had a little relief there. But now we're starting to see call selling and put buying again on the way down. What is a range indicator? Range indicator is, I don't know this person. I didn't make this, although I'm in the process of making my own. MC, that's me, the author. Daily levels market breadth. And I have everything turned off except for the big levels that I track, which is like the prior day high low, the overnight high low, and the current second high low. But you see, we come back down, we test the low today, and we have a small bullish reaction to this level. If they fail this, this is where we start to get the move down into 28,850 for another 70 points.
use the value level as a retracement to get an entry.
You're welcome, KT. Appreciate you being here, hanging out with us on the stream. 28,905, right there, 907. Haven't posted trades in 3 years. I stopped posting trades in 2020. When did I stop posting trades? 2023? 2022? I don't remember. I stopped posting trades, started up again, and we are cranking it, baby. We're off to the races. Let's see if you love me this much when I post a loss, though. If you love daddy, when I post a loss. This looks like absorption for lower. Right here. No high volume bottom wicks. The bears are controlling the top wicks. I'm going to post a line right here. That's that pivot. That's that pivot from 28,853 this morning. And I get wrecked all the way down here. Watch the volume. S&P doing the same thing. They've got down at 74.90. All the way down, baby. That's my target, 28,850. Right there. Great to hear your live comments, but when your voice is coming out and sitting right here. Why is that? Why is that? Am I boring you? Is that what you're saying? 2887. Your voice is too soothing. My voice is soothing. Do you like my soothing voice? I've had 28,850 on my charts in January. It's like a magnet. Yes, sir. Another topic off this area at 28,906. Yeah, God bless me with a radio voice and a radio face. So got that going for me. Coming down 28,885. Still no bounce, no volume, no long. We're got him down for 853 so far. Interesting. May have a face for radio, but nobody can determine the style of the art. Oh yeah. Somebody asked Fable how to cure procrastination and engage in an interesting answer. God bless you with Stallone bun. No. You make more money from trading or other streams of income? Just curious. Sometimes yes, sometimes no. I have months where I make more money trading than I do in everything combined. And I have times where I lose money trading and everything else takes, they support me. So that's the good thing about having multiple sources of income. That's the whole point, is that you have diversification of income sources. When one's not performing, the other ones do. So, highly encourage you to go out and find multiple sources of income. And with today's AI and online communities and online abilities, you can make money in 1,000 different ways. Highly encourage you to seek it out. But back in what, January, December, not to mention the rally I went on back in August, September, I made more money in those months than I make, in a long time. I had a very good 2 months. Let's see here. If you were human, what would you do to cure procrastination? Fable says, I would schedule procrastination to cure it. Every day I'll block out a mandatory hour where I'm required to do nothing productive. I would scroll on Facebook, stare at the wall, do whatever I want. I'm not allowed to work even if I wanted to. It sounds backward, but procrastination feeds itself because it's forbidden. The moment slacking off becomes an obligation, your brain rebels against it the same way it rebelled against work to procrastinate. And suddenly the task you're avoiding starts looking like the rebellious option. Interesting. So that's a human fix. When do you choose to trade ES or NASDAQ overnight gaps? Well, again, the short answer is when conditions permit. When conditions permit. So sometimes the conditions are there to trade the S&P. Sometimes the conditions are there to trade NASDAQ. I don't have a better answer for you than that. I'm looking at both. When I see one ping a trade, I'll take it. So does having an account in Take Profit Trader grant you access to any tiers? No, sir. So the Take Profit Trader is just a prop firm. Now I talk about Take Profit Trader because I trade with Take Profit Trader and we are the best prop firm in the business. So I show products to you all that I believe in, and that is one of them. So, but that has nothing to do with the OM community. So if you want to be a part of the OM community, you have to go to theoptionsmillionaire.com and sign up for whichever tier that you like. And that'll get you access to Discord. Is anyone else feeling like accumulation behavior here? Yeah, it's possible. We do have volume coming in on the 5-minute ever so gently, not incredibly high, but a little bit. And we have yet another bottom up here. Not a lot to get me into a trade at the moment. The more selective you become, the more you make, the more money you make. Counter that tracking spill. Coming up. Another bottom look again. Beautiful stuff. All righty. 15-minute 28,930 on NASDAQ. We have a beautiful top wick up 29,200 that we took. We shorted the top of the market this morning. It's fantastic. Fantastic. Here's our trade so far, not including the one from this morning. Right here, baby. We are killing it the past couple weeks. Posted live in the server for us to make some money. Live in the server. You want to hear a funny story though? This one loss right here, that was the one where I longed NASDAQ, and that's were the ones where they kept using my entry as resistance. So they kept on bouncing. They would hit my entry and then fall, hit my entry, then fall. And it drove me nuts. I was actually up like 50 points on that contract at one point, but I elected to hold and obviously didn't work out. But anyway, we are making money, baby. We are making money. Where did you find the trading time breakdown chart? What do you mean? Oh, I made that. I know what you're talking about. I made that, created that. which I'm in the process of remaking it using Claude. AI is fantastic, by the way. I'm the least technical person you'll ever meet. And I have deep dived into Claude the past 2 weeks. It's become my life and it's literally life changing. Highly encourage you. AI is going to change the world. I was not a believer. I am a believer now. There is going to be severe consequences to it. 100% agree. But man, it is life changing. Life changing. What time frame is your chart on? Right now, it's on the 1 minute. I track the 1 minute chart for volume spikes. My job is to put on the 1 minute, look down to see if I have volume spikes on it, and then I concur on the 5 minute right here. Now I have the 5 minute chart open
on it's not on the
on
screen.
that's not on the screen. I've got one and 5 open at the same time, but it's not on the screen. You guys see the 1 minute right there.
So I tracked the 1 minute for volume.
I tracked the 1 minute for volume spikes, 5 and 15 for confirmation, and of course I want to start. If it's the 15, give me a quick turn. You can look at the chart. This is out of day trading scalping.
And we kind of see the general.
We kind of see the general picture. What's the general food?
We've been a topic off.
We've been a topic off the 29,000
minute.
on the 15 minute.
So the bulls.
So the bulls have some work to do coming into. So we have prior day high, overnight range high. So we have a lot of resistances and supply in this area. So I'm always a big fan of multi-time frame analysis. Multiple time frame analysis, in my opinion, is a must for all traders, even the scalpers. Scalpers, day traders, swing traders, investors. Multiple time frame analysis should be your best friend. Will AI take away jobs? They already taken away human jobs. We have many friends that are being laid off. Like literally, we have like a bunch of, between me and the missus, we have a lot of friends who all work in different industries, from healthcare to engineering to everything. And like half of them are dealing with layoffs right now because of AI. It's obscene. It is, like I said, it's so impressive. Claude and AI is so impressive for someone.
But now I think it's always dreamed of doing. The consequences are going to be extraordinary, both good and bad. I mean, it's going to be a game changer. So college degrees are worthless? I wouldn't say they're worthless. I just think you're going to have to be very selective in what you choose to go to college for. So it's just, I mean, you can 100% make a crap ton of money. You can make a crap ton of money on AI without a college degree. But for me, I had a college degree in accounting. I would not have been an Air Force pilot without a college degree, because you can't be a pilot without a degree. You can't be an officer without a degree in the military. So, that bought me my entry fee into being a pilot. Without it, I wouldn't be it. And I would have missed one of the best jobs in the world. So I think they do have value to them. It's just the traditional value of you need a degree to make money or to get a high paying job. That is completely gone. That is no longer a thing. But there are career fields that you need that degree still as an entry ticket. And that's where until that changes, there's still going to be a requirement. I'm sure the military will eventually take that away, but. All right, big green candle here coming up. They're back to buying some calls. They're back and forth. So this is the stuff I don't like to get chopped up in. I don't like to get shaken out in this back and forth stuff. I'm not trying to catch every little fluctuation of the market. Got about 20 minutes before London closed, and that's where we're going to wrap up today's stream. Be doing 2 streams a day. We'll stream the morning, we'll stream the afternoon. So make sure to clear your schedule. Tell your friends, come hang out with us, learn to make money. Learn to make money. ES bouncing, NASDAQ bouncing. Let's go out to the longer time trades, 5 minute. We have a higher high coming into 28,930. Let's go to the 15. We need 29 to get us a higher high in the 15. But still the 5 minutes there, the 1 minute's there. We have a trend line here that I'm sure you're looking at that we've already broken right there. So that candle just broke the trend line. Sorry, Kennedy. How are shorts looking on the 4 hour? Let's go take a look. 4 hour chart right now is showing sweeping top wicks. So this looks no bueno for longs. We have the move up from Friday, got killed. We have the move up this morning, which we shorted, got killed. So today's close will tell you a lot. And that's the thing about the longer time frames. You have to wait for longer time frame closes. So this higher high right here, if we claim that, then we're going to freaking fly. And this is where accumulation is going to come into play here. This is just shakeout. But we've already put in a lower low at 28,924. We need to hold it. You know, the close of the candle matters just as much as the formation of the candle here as well. So if they get under this 28,921, then we're going to play it on back down to 28.4, at which point it's going to lead a cascading effect back down. So the longer time frame charts paint a huge picture right now. And if you go out to the daily chart, it shows even more. This is the line in the sand, this 28,418. This whole range here, you show that how aggressive the buyers hit. The buyers hit very aggressively in this range. We have a whole bunch of undone liquidity in the 28 block. So guard for it. Don't get caught. Price that starts to move back down that area. It's going to be interesting. We have massive call buying at the moment. Let's go take a look. Let me show you what happens when spot gamma shifts. There you go. The green line going up is call buying. They're starting to hit the calls back up. The blue line going up is selling. So we are seeing some bullish flow in the options here. It does appear the buyers are at least going to control the early afternoon time frame. Yeah, buddy. Yeah, buddy. I canned this tomatoes after ridiculous. You got a 3-year bet. You did Magabagooey. Yeah, buddy. Unbelievable. Like I pulled so many tomatoes off my plants this week that I could not can for the rest of the year and still have more sauce than I need here. Like an unreal amount of tomatoes. We've had a very cool yet wet summertime, which is made for extraordinary growing conditions. It's unreal. I have a very large garden now. I planted 40 tomato plants. All right, right here, 29,960. We also grew a market garden for pumpkins. We put in a whole crap ton of pumpkin plants. So it's amazing. We have another source of income. Where's my farm? I live on a farm. I live on a 50-acre farm that I purchased a couple years ago. I'm currently trading MES contracts, 2 to 4, stop loss is 12, TP is 24, which you recommend, different parameters. Stop loss is 12 points on the, and that's good. I think a 12-point stop on the S&P is probably okay. That's large enough where you can avoid some choppiness, but not too big where you can get destroyed. So I think that's good. I'm not a fan of personally. I don't set target profits personally. Sometimes I do, but rarely, because I find that when I set a target profit, I'm a patient trader. Like I said, I'm not scalping 50 times a day. I'm scalping 1 to 2 times a day. So when I place a trade, I'm looking to put on a trade that's going to net me a couple hundred points on NASDAQ or 30 to 50 points on the S&P. Obviously, that's not going to happen all the time, but that's what I'm gunning for. So I don't want to set a target profit and then close the trade before the trade, finishes its cycle. So yeah. But given the parameters, I think that's a good way to go.
Shoot for one more here.
buddy. With my garden zone, I'm in garden zone 7. I don't think Trade of Eight lets you sets your stops based on market price. It throws me off. I always drag it, on IBKR, when I set a stop, you actually have to select the stop indicator and you type in the price to hit. I love IBKR. For real money, not a prop firm. For real money, it's fantastic. I literally just type in a price hit and a stop set. Now, for prop firm trading, most of them you're going to find to be that drag and drop, where you got a chart that you're selecting your trades on, and you have to click your entry and drag and stop. I think Trade of Eight's a little bit different. You might have to right click. I don't remember. It's been a while since I've used Trade of Eight, but yeah. Can anyone have any suggestions on how to get alerts from day trade signals? I've already chosen my role, but I assume not to get any alerts. You've got the role. Look, I just looked up your profile, so you've got the role, the trades role. I think it's probably just going to be your personal notification settings. I've been learning about trading for the last 2 weeks. Beautiful. I had a good day on Friday. I made 3 trades. I won $90 and I lost 210 paper trading, but I learned a few things from it. I don't trade with a naked eye. Learn to draw support resistance lines and wait for confirmation. That's a great idea, June 1. It's a great idea. If you want to know more, let me know. I highly encourage you to check out the YouTube channel. YouTube channel will tell you a lot. Does TPT offer other platforms besides Trade-O-Late? Yes, they do. So TPT, Take Profit Trader, offers any of the rhythmic platforms, the popular ones at least, and then Trade of Eight if you want the CQT data. CQT data. I captured this morning's move. I'll continue with a stop loss of 12, but work on letting profits run. Yeah, 100%, Richard. So you want to be smart about that. If you come into an area where your target profit is and you don't see any signs of stopping, then I would at least consider altering your target profit, not your trailing stop. You don't want to move a stop. But you target profit, like I said, just don't cut your feet off from under me. The common problem with retail traders is you let losses run and you cut your wins too short. And I think target profits attribute to that. All right, NASDAQ is coming up here. Like I said, the options are turning more bullish. Bombs going off in Manhattan. No way. Uh-oh. Surely the charts would react to that if it was serious, though. Considering it's right down the road from Wall Street. Rhythmic is awful. Yeah, Rhythmic does have some issues with data aggregation when we have volatility, but overall, I'm be happy with Rhythmic. With FX, I'm used to setting stops on TT based on market price. That's okay. Again, a system's a system. Everything I teach you all is based on what I do, my system. What works for me, but I've got nothing against target profit. I just want you to be smart about it. My resistance and supports have been hitting and reacting to them, so focus on learning how to draw them correctly. I'll check out your videos. Just watch you live trading. Honestly, nice one. Appreciate you. Yeah, check that out. Let me know, and let me know if you have questions. You can also shoot me an email at optionsmillionaire2020@gmail.com if you don't want to join the Discord first, but you can do that, or you can join the Discord, the free portion. It should be a DM there, whichever. Links down in the description of the video. Your best friend for supports and resistances is your 4-hour chart or the daily chart. Spend some time on the 4-hour and daily and plot the major pivots of the level. That is the low-hanging fruit stuff. That's the stuff that every single trader should be doing, because that's going to tell you where the big pivots are. That's the easy stuff. So every Sunday night, Monday morning, spend some time plotting major pivots, and you will learn how quickly those things will make you money. So yeah, buddy. Yeah, buddy. It was fireworks. Lame. I got you. Yeah, I'll get you. I'll take care of that. Yeah, if it was important, if that was a serious explosion, the markets would react to it. You remember January 6, 2020? How quickly the markets react to that? So if it's serious news, the markets will react to it before we know about it. When did you start trading futures instead of SPX calls and puts? I made the change I'm still trading SPX options, but it's more like if you notice in the day trade channel, I did post an SPX trade. I trade options more on swing trades, longer term trades than I do scalps anymore. Because it's just short dated options are not really conducive for call outs. They're fun when they make money, but they're going to wreck people more than the futures. Bad for business. Yep, I remember that. You remember when a Russian missile fell into Poland and the markets tanked like hundreds of points, and then they realized it was Poland's own missile, and then the market recovered instantly, right when the Russian news kicked off. Thank you for the free educational content. You're welcome. 4 hour and 1 hour for supply and resistance. You got Yep, yes, sir. That's it. I forget what day it was, but I'm sure we could search it. I remember that day. All buying, put selling on the 0DT options. It looks like the bulls are going to control this back up into the afternoon. If we take over the 50%, which is 29,050, there's a dang good chance we recover every bit of this. Now, this will be the exact same thing we've been doing now for weeks. Bullet or bearish in the morning, bullish in the afternoon, recover. This is why we've been stuck now since middle of May. We've been at the same exact price since the middle of May. I need to learn what leaves are. ES is coming up. They have all this resistance. Like right now, for example, going out to the longer time frames. What do you see? A whole bunch of pivots right in this area. The market loves to pivot into this area, which was a support from the overnight move. So this is called an SR flip, support resistance flip. Right there. Let's see what Russia betas do. For the trade this morning, what stars align for you to take this toward the top of the bullish morning move? Volume was the key. The aggressive top wick, the market conditions itself started to break down. Options were incredibly bearish. So I knew there was a chance for a decent pullback. I didn't realize it was going to sell off that much. Of course, I don't have a crystal ball, but I knew it was going to pull back. I waited for the first top wick and bought back. Top wick after the liquidity cleared. Volume, the highest volume candle today, which is the primary number one. And then I took entry. Do I do stand-up comedy on the weekends with my dry humor? No, I don't. No, I don't. I'm more of an, I don't know. No, I don't. I wish my wife found me that funny. I'm not sure if you share profits, but how much do you make? Yeah, I usually don't talk about dollar amounts because it causes a lot of FOMO. Maybe sometimes I'll start to show some money like that, but yeah. I like the YouTube stream thumbnail. Thanks, Miguel. Really appreciate it. Still going 29,010. I'll show my payouts and stuff like that, you know. Oh yeah. Big call buying, put selling. Let's take a, and we're about to wrap up the stream here in 5 minutes, but look at the options data. Call buying is straight up, put buying is straight up, or put selling is straight up. So we have a little bit of bullish flow hitting the tape here. We go out to the longer time frames. We have a bottom wick. We have a 3C on the 15-minute. We have a 3C on the 5-minute. At which point we're going to go, baby. Refitting. Yeah, buddy. If you learned something today, come back and join us again tomorrow. Of course, like and subscribe to the channel. Helps the algorithm do your thing if you wouldn't mind. Tell your friends. Share the link. If you do join the Discord, I do have a Discord affiliate program. You if you want to take 40% of my money, join the Discord and then sign up for the affiliate program. Anybody who uses your link to sign up for the Discord, get 40% of my money forever. Come hang out with us. NASDAQ is 29,009 heading up. Looking like we're going to attack 056. From the open till your morning short, the VIX was creeping up even as the market went up. I didn't even catch that too. I would probably say that's correlated to the options. Yes. But I didn't even catch that. Yeah. That would help my confidence even more. Fantastic stream. I'll be back. Thanks, Jimba. Appreciate you. I'm not sure, K2. I'm not sure. I'd have to look. I've never done the comparison. If they sign up for free or tier 1, then upgrade. I'm not sure. That's a good question. I don't know. One trade this morning, 29,171 is where we shorted. Right there. That's where we took the short. I do have a habit of when I catch a banger of a trade like that, I tend to get lazy and I don't want to trade again. My motivation for trading goes out the window after I take a good trade like that because I ask myself, what else do I need? It's like getting a massive endorphin hit on taking a fantastically executed trade. And now I want to take it again. Like, no, I'm good. So unless I see something jumping at the page at me, I don't know. I'm good. Massive call buying, put selling still the options. Almost there, baby. A lot of resistance coming into the S&P. Like, 74.95. Yeah. Up to 75.35. It's a big range. Alrighty. Well, a 4-hour chart. Remember the keys here. Have a massive top wick on the 0.5 candle. We have a massive bottom wick on the 0.9 candle, which these are central time, so 10 o'clock Eastern time. So who's going to win? Today's chart close will be very crucial to your forward-looking guidance. If the bears take back control, then it may be time to open up a swing position for another 100 points down in the S&P. If the bulls hold this, first target's going to be the morning high of 75.50, and then after that, all the way back up to 76.32. It's difficult to say right now. All that to say is continue to track the 4-hour chart, continue to track the daily chart. I'll take a look at the answer. Hope y'all enjoyed the stream. That is going to be the end of us today, as it's London close and time to wrap it up as we get into uncertain.
All right, for one more here, the Russell. Let's see. The reason I took this is for your last attempt for today. Get another right here. This is last week's Friday's POC. Look at that. Missed the top of that. But I'm just gonna target this liquidity. But that POC, Friday's POC, nice little pivot point retracement. Looks like we should be able to get down there. It's just a micro rusher.
Upgrading your home has never been easier. Express delivery. You'll get
Faded that and just broke right through the I don't know if we can get down there or not. Let's look at tick charts. Not much room of breathing there, huh? Cannot get that liquidity. I mean, the IB low would have been nice, which is also Friday's value area, last week's, Friday's value area low. Oh, now it's moving. It takes, now it's moving. Just broke even on that one. Check the Dow. My levels are at the micro. Yeah, way below value.